Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Dan Kessous, CEO of Nasdaq Canada. We're going to take a look at what's happening with the Canadian market trends. Dan, it's great to see you again. Welcome back to Trade Talks.
Hi, Jill. Good to see you. Thank you for having me back. Always a pleasure.
All right, you got it. Let's talk about volume and trends, particularly what you saw with retail investors in Canada for 2021.
Yeah, 2021 was another interesting year in Canada and I guess in North America. A lot of activity from retail investors, obviously. In Canada, we have a two-tier, maybe three-tier market when it comes to listed companies. We have a senior market for large cap blue chip companies and two junior markets for smaller cap companies. Those smaller cap companies are very attractive to retail. They're cheaper. Allows them to participate in early stages, but they're also volatile. So we saw those markets grow about 50 to 70%, whether you look at mid to small cap or micro cap companies, and all came from retail mostly in Q1 of last year. The senior market, however, the large cap was a bit lower. It was down 8%. But nonetheless, from a Nasdaq Canada perspective, we benefited from those trends greatly. Our market share on the senior market grew from 18% the previous year to about 19.5% last year. And on the smaller market, the small cap and micro cap, we grew almost 50% in market share there. And we did that by strengthening our market making and liquidity provision capabilities. We've reshuffled our odd lot offering. We've tweaked our market making obligation. And all that growth in shares also allowed us to offer even a stronger market data product. With Nasdaq Basic Canada, we have now an enterprise license for professionals that reduces the cost at the enterprise level, and the Basic Canada for non was enriched with an enterprise license as well, where we added level 2 and last sale data and made it even more attractive for those large enterprise with scale and a lot of cost saving there. So a pretty good year all around for us, and retail was definitely a big part of that story.
And what are your expectations for 2022?
So in terms of volumes and market activities, we expect a slowdown in volume. The catalysts that really push retail to the peaks in the last couple of years are not all there, and we figure some retail is here to stay. It's questionable how much firepower they still have. But all those that have open accounts will continue to, hopefully invest for the long term. In Canada, we don't have the same, retail infrastructure and rules that there is in the US. So the catalysts are a little bit different. We don't have free commission except for 2 or 3 brokers that started offering that late last year. So we as there's a rotation with the rates increasing with the Bank of Canada and the Fed in the US, we're going to see a rotation from growth companies to more value companies, and that I'll probably have retail take a bit of a step back and remain on the sideline for the remaining of the year with COVID and hopefully things getting better and the end of the tunnel being soon. I hope it's probably going to be a lot of travel in the summer and people wanted to take time off on vacation. So we expect the beginning of the year has been pretty strong so far. A lot of volatility with the some of the geopolitical aspects out there. But I think we start to see a slowdown in the summer and maybe the typical pickup in the fall, but definitely not as big as last year.
Yeah, interesting, because I wanted to get your macro thoughts on the Canadian global markets, and that's a great point that you make, where we're going to kind of shift from being in front of our computers, being at the desk, and starting to go back into the experiential world and participating in experiences. So it does make sense that you might see some of that participation growth slow down a bit when it comes to the retail investor. Anything else from a macro perspective that you're watching?
We're looking at, we're keeping an eye on regulations. We are regulated, and it's a big part of how we conduct business and how we can grow and how we offer products. So, we keep a strong eye on that. In Canada, there might be a couple of things on market data. So there's still a review underway in terms of market data offerings, market data products, and pricing. There'll be a combination of two of our regulators in Canada, the investment regulators and the mutual fund dealers association, that are looking to merge. Not a big impact, I guess, from a market perspective, but a bigger impact on dealers. Maybe some growing pains at the beginning, but all for the better in the longer term and in the future. It'll bring a lot of efficiencies. The other thing that, just like anyone else, have to keep an eye on is anything around digital assets and regulation around it too. So there's ETFs that trade in Canada already on market, on exchanges, mostly future based, with a couple that are spot based as opposed to the US. So from a digital asset, crypto perspective, Canada is a little bit of ahead of the game, I guess, in terms of regulation as well, where the OSC has put in place a program to get all those participants and players to come and present their model and be regulated if they need to. And for those who haven't voluntarily come by, there's been some enforcement action. So I suspect we'll see a little bit more of that this year as well.
And finally, Dan, to wrap up here, what's new for Nasdaq Canada in 2022? Yeah,
so we're going to keep building on some of the products that we delivered in the last year, like our dark pool that's been growing nicely, our guaranteed execution facility that's been helping retail with the help of market makers. That's going to be part of our growth this year. And we're also launching new products. So we'll be launching an odd lot book in the second quarter. That will help us round up our odd lot offering. And that's something that's very popular with retail, and have a complete offering. You have marketable orders or limit orders, whether they're client orders or market maker orders. We'll have a one-stop shop for anything odd lot in the very near future. And a few things along the way, but towards the end of the year. So you've asked a lot about retail. We talk a lot about retail. It's very important. But there's a big chunk of the market is also asset managers and institutional flow. Always hard to navigate those markets for them, especially with the boom in retail that we've seen. And the volatility. So we're looking to launch a new innovative product for them at the end of the year. It'll be based on Pure Stream that launched in the US last year. We're going to bring that model in Canada. It'll be a block venue that will allow asset managers to trade blocks in different manners, including an outcome with an average price, with minimal impact on the market and minimal impact on price. So we're really looking forward to that one, because we've heard a lot from institutions in terms of the difficulties in sourcing liquidity and navigating those markets in recent memory.
All right. Certainly a robust year ahead, Dan. It was great to catch up with you. Thanks for joining us on Trade Talks.
Thank you, Jill.
You got
Happy
it.
to be here. Thank you. We'll see you. Bye-bye.